Hello, and welcome to today's webinar on trading strategies and risk management using Bill Williams trading system. My name is Ali Mortazavi, and I'm the head of education at Orante. Today, we will dive into how to effectively use the alligator indicator and the awesome oscillators to generate reliable buy and sell signals. Please be noted that this webinar is brought to you by Arante, which is an online broker committed to providing top-tier services and building lasting and trusting relationships with clients and partners. Before we begin, please note also that the content of this webinar should not be construed as investment advice. The strategies and information provided are for educational purposes only and should not be considered as a recommendation to trade. Because trading CFDs carries a high level of risk and it's possible to lose all your invested capital. Please ensure you understand the risks involved and seek independent advice if necessary. Okay, in today's session, we will learn how to use the alligator indicator to identify and confirm trends, use the awesome oscillator or AO for entry signals, and combine these tools together as a comprehensive trading strategy for buying and selling entry signals in the market. We will also have a Q&A session at the end of this webinar to address any specific questions you might have. Okay, here's the slide I borrowed from our previous webinar about the alligator. If you remember, we went thoroughly to the details of the anatomy of the alligators. And the alligator indicator created by Bill Williams consists of 3 lines. The lips, or the green line, the teeth, or the red line, and the jaw, or the blue line. These lines are moving averages shifted into the future. The lips, as you see on my slide, the lip is a 5-period MA shifted by 3 bars, and the teeth are an 8-period MA shifted by 5 bars, and the jaw is a 13-period MA or moving average, a simple moving average shifted by 8 bars. The let's say the hidden secret here is that Bill Williams created the MA not from the close price only, but also from the median price, which is the average between the highest high and the lowest low of each candle, high and low of each candle, which is the median of the range of each session. And we can use alligator for trade identification. We explained that an uptrend starts when the lips cross the teeth and jaw from below, while a downtrend starts when the lips cross the teeth and jaw from above. And here are some examples. You can see when the market is getting bullish, you can see the lips crossing above the teeth and jaw, getting at the top of the alligator, and when the market is getting bearish, the lips usually gets below the teeth and jaw. And this is our first signal to identify the market sentiment, the overall market sentiment. Of course, we are not going to rely on this explanation solely to trade the alligator, but we for sure need more confirmation from the other technical tools. Trend confirmation using the alligator occurs when the lines move apart and in the same direction, indicating a strong trend as the alligator's mouth opens. So when the alligator lines move apart and move up or down, it indicates a strong trend in the market. The separation of the lines signifies the alligator's mouth opening, indicating the alligator is feeding and the trend continues. Conversely, sorry, let me just bring all of the above. Okay, so here we have the alligator constructor. It's better to somehow memorize it because uh, you may need to know that this is a very short period MAs. Okay, however, back to our discussion, when the lines converge, it suggests a possible end to the trend or a period of consolidation. So we use the divergence and convergence of these moving averages to measure the market's momentum. If you like to know more about the details, you can just watch our previous sessions, the first and second sessions that we had in last week and the week before, and we explained all the details about the alligator anatomy and the measurement of momentum and trend identification techniques. To generate entry signals, with the alligator, look for the lips crossing the teeth and jaw. A buy signal occurs when the lips cross from below and the lines move apart, indicating a strong upward trend plus a gathering positive momentum. Conversely, a sell signal occurs when the lips cross from above and the lines move apart, indicating a strong downward trend. Okay, now let's move to the awesome oscillator, which is a powerful tool to measure market momentum. This is one of the tools of the Bill Williams trading system. It consists of a 5-period simple moving average, 5-period simple moving average as a short MA, and a 34-period simple moving average as a long MA. The difference between these two moving averages is plotted as a histogram. For example, you bring it up in your MetaTrader. Let me make sure that everyone can see my MetaTrader 4. Okay. Very simple. Just below the Bill Williams trading system, you have the oscillator, double click and this is the value up. It means if each histogram is higher than the previous one, it comes in green, and if it's lower than the previous one, it comes in red color. Okay, and then if you just press OK, you will see something like this will appear above below your chart. And here we can measure the distance between the 5-period and 34-period simple moving average. Then all of the numbers using in Bill Williams trading tools are rooted from Fibonacci sequence numbers. Okay, for example, here you see when the market is losing momentum, it means we have a convergence between the 5-period and 34-period moving averages. Then we see the histogram, the AO or awesome oscillator histogram is getting down or is shortening. So this is a signal of losing momentum. And on the other side, when we see the bars are talling, so it means the momentum is accelerating as the moving averages are diverging. So this is how you can apply it on the chart, but let's get through more details to see how it works. Cool. Okay, so everyone can see my slide right now. So let me get through more details about the AO. One of the ways that we can generate signals is using the crossover technique. A bi-signal is generated when the AO crosses the zero line, indicating a shift in momentum to the upside. Similarly, a self signal is generated when the AO crosses the zero line downwards, indicating a shift in momentum to the downside. As a pro trading tips, it's really important to confirm AO signals always with volume in stock trading. A high volume supports the validity of the zero line cross, adding a strength to the momentum shift. But in Forex, we don't have this option, so we try to put it in another way. AO is most effective in trading markets. So in Forex or in stock trading, avoid using it in sideways or choppy markets as it can give false signals. And also for more reliable signals, we should use higher time frames like the H4 forever or daily chart to confirm the lower time frame signals. And there are some exceptions. You have to be prepared for false crosses. Be cautious of false crosses, which can occur during low volatility periods. Wait for a clear break and confirmation before entering a trade, and also watch for divergence between the AO and price. If the price makes new highs but the AO does not, it could indicate a weakening trend and maybe potential reversal, which gets us through the very common technique using AO as the twin peaks. We have the bearish twin peaks and the bullish twin peaks. Here, let's take a look at bearish twin peaks. The bearish twin peaks pattern is formed when two peaks appear above the zero line and the AO histogram, with the second peak being lower than the first, followed by a red bar. As you can see here, we have the first peak here and the second peak lower than the previous one, and is followed by a crossing below zero, which can add to the significance of this bearish signal. This pattern indicates the beginning of bearish momentum and can be used as a sell signal, but strengthen the signal by identifying resistance levels that align with a bearish twin peaks formation. And also consider entering a trade slightly before the second peak fully forms, but only if other indicators confirm bearish sentiment. What we mean from this, if you, for example, take a look here, it's really important to have the price confirm all of these, let's say, signals generated by not only the AO, but also any other trading indicator. For example, by this bearish twin peaks pattern, we mean something like this. For example, here you see we may have had a very sharp decline in the price and then a recovery above the mouth of the alligator, out of the alligator mouth. And then we see here our second peak is not higher, is not below or lower than the previous one. So there is no sign of changing the trend. And you see, after some fluctuations to the downside, we see the price is getting higher and continue the previous, let's say, correction move to the upside and actually forming a new uptrend. But if you consider the shape of AO at the beginning of this uptrend, you see we can identify two peaks, or let's say, put it in a better words, it's a troughs. Okay, so we get to that later. But one thing is very important to notice. Let me find maybe a good somehow divergence. This is what we are talking about. When you have the price forming higher highs or higher tops, and you have the AO forming the lower tops, it means a divergence. And if you look at the major market AO tops or peaks, you can see this peak is lower than the previous major peak. Yes, of course, I can see also this AO peak here, but we consider it as a market noise. And you can also see the example here on my presentation. So here's some pro trading tips. First, we have to strengthen the signal by identifying resistance levels that align with the bearish twin peaks formation, and consider entering a trade slightly before the second peak fully forms. If the peaks are too far apart in time, the signal may lose its strength. Okay, ideally the peaks should be relatively close together. And in volatile markets, you might see false bearish twin peak signals. Always look for confirmation from other indicators. On the other side, we have the bullish twin peaks pattern, just in the opposite, formed when two troughs appear below the zero line on the AO histogram, with the second trough being higher than the first, followed by a green bar, as you can see here on my slide. This pattern indicates the beginning of the bullish momentum and can be used as a buy signal. But again, look for support levels that coincide with the bullish twin peaks pattern to increase the reliability of the signal. And as with the bearish twin peaks, consider entering a slightly before the second trough fully forms if other indicators are bullish. By supporting resistance, we means something like this. For example, let's get back to our previous example. Let me change the instrument maybe to something else to have a better visualization for you. For example, here you can see this is a very clear example of bearish twin peaks. And if you look at the price, we have some obvious resistance level here Yeah, about 161.07. And we see this market, the first top and the second top. And at these levels, the price can't move higher. And we see the oscillator is diverging from the price slightly. And as soon as we get below the bottom fractal, out of the mouth of the alligator, we see the crossing below zero in AO status. So it means we have a sell signal, very clear sell signal. This is a very common way to trade the AO. So the first, if I want to state here, as a rule, the is a resistance level, or let's say identify a resistance level here, okay? And as the second rule, we need to see the price and oscillator diverging. It's a really obvious one. So the second rule is diverging AO from the price. The third one is price crossing below the bottom fractal below the mouth. Okay, it's very important. This is rule number 3, as we see has happened here. So we can have an entry point at this level, and we can have a confirmation when we see AO crossing zero almost at the same time. So here are the 4 rules that we need to consider when we want to go short using alligator, fractal, and AO. So it's going to be our entry. And we're gonna put our stop loss above this. This is our entry, and this is our stop loss above this resistance level. Okay, so this is what we mean about the bearish Twin Peaks entry signal. And on the other side, you can have a bullish peak or Twin Peak signals. Let's see if we can find something. It's very important, guys, to have the peaks very clearly formed. For example, here you see they're not that clear, and also you see the market is moving down, so there is no there is a kind of divergence between the price and the AO oscillator, but you know the price can get above the get out of the alligator's mouth. So as long as we don't have one of our rules applied, so we are not gonna trade this signal. Okay, so it's very important to have it clearly, something like this, that you can see we have a diverging bullish twin peaks and this diverging bar after this bottom fractal that can be considered somehow as a bifractal. This is after these two top, we can identify this fractal for sure, yes. And that's a way that if the price breaks above the last top fractal, getting out of the mouth of the alligator, and we have the crossing, and we have AO crossing above the zero line, so it can be a sell signal. But you see, during the choppy market, it's not, it doesn't work as good as a trending markets. So this is a limitation of using alligator in very short time frames. But if you change it to maybe higher time frames, that can give you a better or more clear signals to buy and sell the market. And you might see that it occurs rarely in the market, but when it occurs, it's a very strong signal. For example, here you can find another bullish twin peaks, nicely formed with a good distance from each other, with a good depth of the market. And you can see this green histogram bar is signaling, let's say, decelerating bearish momentum, and at the same time we see the price is breaking above the last top fractal out of the mouth of the alligator, while the AO is crossing above zero. So this is a very, very nice signal. And by the supports level, we mean somewhere like this. If you take a look at the shadows, you can see the market has been struggling to get below these levels, so we consider it as a strong supports level, and that can somehow add to the significance of our bullish signal here. And again, we can put our stop loss just below this supports level, and our entry will be at the candle breaking above the last top fractal out of the mouth of the alligator to the upside, okay, somewhere like this. And we have this confirmation number 1 and confirmation number 2. So this is one of the common ways to find bullish signals using AO, and in that case you might consider the distance between our entry and the stop loss is somehow a lot. Okay, that's the case, but some books say we can consider the bearish fractal, or the let's say the bottom fractal after 2 candles, that is identified, and then we can consider to get into the market above the high of the bottom fractal, which here is called bifractal. Okay, this is the thing, but in that case we can't be sure 100% that the market is getting above or out of the alligator's mouth. So that might give you a better risk reward something, but it can decrease the accuracy of the signal at the end of the day. So it's better to consider entering the market maybe when we have a clear confirmation from the fractal with the price out of the mouth of the alligator, and also we see added to narrow the odds, we have the ellipse crossing above the teeth and jaw. So that's another, let's say, indication of accelerating bullish momentum in the market. So that would be a good entry opportunity. In that case, the probability of getting to the high maybe can be more. Or also you can use the last fractal. This is another common strategy, or below the for your stop loss, or some places below the alligator to put your stop loss. In that case, you can get a better reward to risk ratio as well. And now I'm putting all of these here as a trading strategy, comprehensive trading strategy. Let's get through the Williams buy strategy. Bill Williams buy strategy involves several steps. First, identify your top fractal above the alligator lips. So we have the downtrend here. Okay, we have this downtrend and we see the bottom fractals are getting higher, and the price is getting into the mouth of the alligator. These all signs of losing bearish momentum. Okay, so first identify a top fractal above the alligator lips. As soon as the price gets above the alligator like this and formed top fractal, it means we are changing the sentiment. The sentiment in the market is changing. And then we need confirmations, include the RSI crossing above 50 and the AO histogram turning green above 0 or forming a bullish twin peaks pattern. This is an ideal way. However, if we see just AO histogram turning green above 0 or forming is enough, or we see a crossing above 0. So set your stop loss below the last bottom fractal. Wait for all conditions to be met before entering a trade to avoid premature entries. Is really important, and you have to get yourself prepared for any unexpected move into the market in the case that this strategy doesn't work. So it's really important to set your stop loss at the best price level that can make you sure if the price hits this level. If the price hits this level, is everything gonna be wrong. So you need to close as soon as you understand your analysis has been wrong. So wait for all conditions to be met before entering a trade to avoid premature entries, and also consider entering with a partial position and adding to it as the trend confirms itself, because Bill Williams trading system is very let's say adapted to market trends. So you can enter the market at the beginning of a trend with a smaller size of the position you are able to take regarding your risk amount, and then you can increase your position after maybe forming each bottom fractal above the alligator, above the lips, and then you can add to your position. And also consider the partial exits. That would be very helpful to risk-free your trade that I guess we explained in our webinar about the risk management techniques. So avoid entering trades if all conditions are not met, as this increases the risk of false signals. because guys, alligator trading system is created based on moving averages. So it's very common that in choppy markets you get false signals. That's why we use RSI here as the to narrow the odds and to use it as a tool for extra confirmation about the price to enter the market. So in high volatile markets, be extra cautious and look for a stronger confirmation. Even um, just let's say decrease the size of your position after doing all the calculations. Similarly, Bill Williams' seller strategy involves identifying a bottom fractal below the lips. Wait for the lips to cross below the jaw and for the price to cross below the last bottom fractal. Confirmations include the RSI crossing below zero, as you see here, and the AO histogram turning red below zero or forming a bearish twin peaks pattern. Set your stop loss above the last top fractal. Because during forming a trend, we consider each market top as a resistance and each market bottom as a support level. And during a downtrend, we expect the price to break below all the support levels and to keep the resistances. So each market top can be a good place to put our stop loss. And don't forget, always use a stop losses to protect against unexpected market movements. And also use additional trend confirmation indicators such as other moving averages to validate your signals. And again, I said that's why we use RSI here. And avoid selling if not all criteria are met. It doesn't matter how much you have this short sense about the market. Okay, we need proof to enter the market, so this helps prevent entering trades on weak signals. Also, if the market volume is low or it's at the end of the trading session in a day in forex market, or we are about the data announcement, is better to be more cautious, and as signals may not be as reliable. So let's break down the buy strategy using the provided chart and explain the entry rules, stop loss rules, and confirmation details step by step here. So top fractal above the lips, lips crossing the jaw. For confirmation of the entry, price crossing the last top fractal, and we have the RSI crossing above 50. At the same time, AO formation of bullish twin peaks, or as we see here, and also at the entry candle, we see AO crossing above zero in green. So we set the stop loss below the last bottom fractal to protect against downside risk. And that's it. That would be a good entry. We can have the exit plan of one reward to risk ratio or 2-1 reward to risk ratio, depends on the market trend and the sentiment. Case by case, you have to investigate it. And by following these steps, you use a systematic approach to identify a buy signal using Bill Williams trading system. And this strategy combines multiple indicators and confirmations to increase the reliability of your trade entries, helping you make more informed and confident trading decisions. Always remember to adhere to risk management principles, such as setting appropriate stop loss levels to protect your capital. And also don't forget that exiting the winning trade is as important as the losing trade. So always have a plan for identifying your profit, for take profit. Okay, so I think we have now covered the main aspects of using the alligator and AO indicators within Bill Williams trading system. I will now open the floor for questions. Please feel free to ask about any parts of the strategies or how to apply them in different market conditions. If you have a question, which time frame is the best time frame for using AO awesome oscillator? We can use AO in different time frames. For example, short-term trading time frames like 1 minute to 15-minute charts uh, are best for day traders and scalpers who aim to take advantage of short-term market movements. Uh, it provides numerous trading opportunities throughout the day, but signals can be more prone to noise and false positives, requiring quick decision making and precise execution. But for medium-term trading, which is best for swing traders who look to capture price swings lasting several days to a few weeks, it offers a good balance between signal reliability and the number of trading opportunities. So uh, it requires patience, however, and the ability to hold positions overnight or over several days. And also for long-term trading is also suitable for long-term trading for time frames like daily and weekly charts, and it's best for position traders and investors who aim to capture larger market trends. In that case, signals are more reliable and less prone to market noises and fewer trading opportunities. However, it can provide and longer holding periods is required. But don't forget always to test the AO in different time frames and the specific, let's say, trading instrument you wish to trade on multiple time frames to get a broader view of the market trend and to see if the instrument you want to trade is performing very well with the AO or not, and also combine AO signals with other indicators and tools. There are many ways you can combine AO with moving averages, with RSI. Hope we can find some time maybe in our next sessions, and we will get through more details about the advanced trading strategies using Bill Williams. Thank you all for participating in today's webinar. For more educational content and future webinars, please stay tuned to our updates. Happy trading. That's it from my side. Thank you so much and have a great evening.